Hello traders and welcome to another video review. Today is Friday, April 15th, 2022. Let's start with the Forex calendar. The London session is almost empty with the data release. However, we got some interesting data during the New York session. We got New York Fed Empire State Manufacturing Index scheduled for release 2:30. We got the industrial production and manufacturing production together with the capacity utilization data. All of them are scheduled for release 3:15. And then at the end of the day we got TICS. So pretty much it looks like this day will be very low, not really a market movers here. However, we can take a look what happened on the different pairs related to the US dollar, because as we remember, yesterday was very interesting day as well. So first, let's start with the US dollar. US dollar to the Canadian dollar daily time frame chart is looking bearish. The reason for that is that we got the ABC pattern completed. Wave B of the ABC pattern is completed. Now we're waiting for the wave C. We have a big engulfing pattern here at the top of the wave B at 1.2675. okay, so this is the high for the wave B so far. It looks like this wave might be completed, so what we need now is the wave C to the downside. So let me just put the arrow here, and we need this wave here. Wave C should go below the low of the wave A. Low of the wave A is at 1.2403, so we should go a little bit lower than this, possibly towards 1.2301. And then the ABC pattern should be completed. Let me just put the wave C down here, and this is the target level for the wave C. There might be some sort of the consolidation here in the wave B, but just because the wave B is not terminated, right? So if we will see some kind of a horizontal trend, some kind of a forming of a like a triangle or something like this in the wave B, because it's still possible, then of course we need to assume that the wave B will take a little bit more time to form, and then the wave B will be simply much more complex in time and price. So far it looks good. So far it looks like the wave B had been completed. We wait for the downtrend resumption. Euro dollar. Let's take a look what is going on there. Yesterday we got the European Central Bank interest rate decision. However, as you can see, it also means that euro dollar made a new local low, and this is as well a swing low. The low was made at the level of 1.0758, so that's the new technical support, local technical support. Today we are starting the day with the red candle as well. In order to change this outlook for the euro dollar, because it looks bearish, very bearish. It looks bearish for years, since 2021 right now. In order to change it, we need to first break above that supply zone, and the supply zone is between 1.1106, 1.1167 or even 85, whereas the high from the end of the March 2022. So please consider the fact that we would go lower for quite some time now on the euro dollar, despite the fact that the market is on the daily time frame chart. It looks like a very oversold. However, this can take some time. Basically, it can take some time, because if the market is trending, in our example, if the market is trending down, the RSI might stay oversold for quite some time. However, if we take a look here, on the 7th of the March, we can see extremely oversold market conditions at the level of 23 points. We got the new local low made after the news. However, no new low was made on the RSI, which means there's the divergence between the price, which is making new low, and the RSI oscillator, which doesn't make a new low. So this is a positive divergence or bullish divergence, and we should see some very, very soon we should see some kind of a pullback or correction to the upside, maybe even a short squeeze. So please be prepared for this sort of the situation to happen on the euro dollar in the nearest future. So far we're still trending down, we're still making new local low, but please be careful, because we might reverse, at least in the short term, the recent moves to the downside very, very quickly. Let's take a look at the US dollar to Japanese yen. US dollar to the Japanese yen daily time frame chart is looking bullish, and we have a new swing high. 126.57 is the new swing high. So it looks like this move to the upside is still being continued. It's a strong move to the upside. Right now RSI is 81 points, is extremely overbought. However, the market participants doesn't really care about this situation. As I said, RSI might stay overbought for quite some time if the market is trending, and the market is really, you can see it here, the market is really trending very dynamically, very aggressively to the upside. We recently passed up my technical resistance, and the levels from, I think I got one more for you guys. No, it's everything is past now. So let me just zoom out. Let me see if I have more data for you, because right now it's 2015 and 125.85 has been violated, and that's it. Data is gone. So I got only like 10 years of history, and that means the US dollar to Japanese yen is the most expensive in 10 years, over 10 years. So this is kind of an unusual situation. The market is buying American dollar, selling the yen hard, which means the US dollar should go up. Let's take a look at the US dollar. US dollar index, there you go. US dollar index is keep going higher. A recent high was 173. Today we are keep pushing higher towards 147. We are out of the channel. We are trending above the channel, which means this market might even accelerate to the upside. The next target, let me just point it on the screen. The next target is that's the technical resistance, so it's here, like 102.97, 103 basically points, and then of course we got 103.81. In the meantime, there is some small resistance here around 189, so it should be easily passed, and then of course we can fly higher towards these two levels, and that means again the US dollar will be the most expensive in this is 2017. So very, very interesting situation, very bullish market, aggressive market, dynamically trending back to the very high levels the US dollar index is, and it's still in the uptrend. Let's take a look at the last market, which is Bitcoin. Let me just zoom back in, and what is going on? The market of Bitcoin is keep going lower. Recently we got this breakout here, right? However, this breakout was bearish below this short-term trend line. We got a bounce was faded. Right now we are still fighting for the technical support around basically the level of $40,000. The main level is 39,266. It looks like we are going to break below this level very soon, and then the market will go lower towards 37,000 and 34,000 dollars. So please keep an eye on the Bitcoin. It's still under the bearish control. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.